Ladies and gentlemen, when Doris Grunwald invited me some time ago whether I would participate in a workshop on enlargement, I thought of a small seminar like in the old days of East-West integration. But the great interest in the debate signals three things. First, the importance of integration for all of us, and especially in a country which is located at the borders of the two regions. The financial crisis left its traces in the new member countries, and questions are raised whether the dynamism of the early years of integration will be seen again in the future. And the third point is that we all have to learn lessons, what we did not get wrong, not get right in the first 10 years, because this morning and the debates reminded me very much of the days and months of the years 2008, 2010. I remember the Romanian governor warning for some years that the expansion of credit in his country will not be sustainable. But at that time, we didn't have the instruments, or the thinking in regulation was not as it is now, that we need to intervene in the expansion of credit because it's always a potential source of crisis. And I was also reminded of my first visit to the Central Bank of Poland, where in the lobby there is a description of the history of the central bank and also of the years in the 1920s, when there was already a strong commitment to stability in that institution. And obviously, institutions have long memories, and this has also supported, I would say, maybe the current success. But let me first look back to the year 2004. It was a moving ceremony when the central bank governors of the new member states entered the stage of the ECB conference room, and one by one the national flags were put to the, next to the flags of the old member states. And only a few years earlier, in the late 90s, a first unofficial meeting had been organized by our colleagues in Helsinki, and it was like two continents approaching each other. The Austrian Central Bank had always followed developments in Central and Eastern Europe with great interest and built networks of contacts, exchange of views, and friends. And this interest was shared with the institutions which have organized this conference today. What was the expectation then, 10 years ago? And what could be the challenges ahead of us? In the late 90s, EU and Euro membership appeared as a lever for economic growth and stability. Difficult years of transition and transformation had been the experience of the 90s, with exchange rate instability, financial crisis, shocks to the manufacturing sector, big challenges for the labor market and the social system. Since the year 1914 is very much on our minds and is also mentioned in the conference briefing, I would like to make only one remark on this long-term perspective. In 1913, per capita GDP of Central and Eastern European countries was 40% of the Western European level. And it was still there in 1973. After lost decades and the early years of transformation, it had fallen to 30% in 1998. And by 2010, a decade later, it had reached 53%. And this is the big achievement, the catching up from 30 to more than 50% within 12 years. Enlargement was one step, and it was important for two reasons, as Michael Landesmann has underlined. First, as a signal to the economic and political actors within the countries, so that expectations could be adjusted. And second, also as a signal to the external actors, as a reassurance to provide capital, know-how, technology, and organizational and market practices know-how. But why is the performance so different in the different countries? In a recent list of attractive countries to invest, Poland was mentioned as an example of smart leadership and proximity to a strong economic partner in the region. And this was mentioned as a recipe for success. Of course, nobody can change geography, but the issues which we tend to underestimate, maybe as economists, are very much the soft facts, the behavioral effects, and also the building of systems and strong institutions. There is still a gap in income levels, and it may close slower than many of us had expected or hoped for. Enlargement was a success, to a certain degree only. Stabilization in political terms, reliability of institutions, predictability of business conditions do not come automatically with economic progress. The early debates on enlargements centered very much on nominal convergence and the preparation for EU membership. The ECB gave a clear recommendation, and I think this was in my speech 10 years ago: do not adopt the euro too early. Real convergence is needed. But no recipes were available for structural adjustment. Old member countries were struggling with these reforms as well, or not pursuing them to a sufficient degree, or not at all, as we have found out during the crisis. In a study Fritz Preuss had published in the year 2000, his conclusion was: enlargement is a win-win situation for new and old member countries. He pointed to the trade effects, to single market effects, to factor mobility like FDI and migration, and to the costs of enlargement. The relatively smaller area of Central and Eastern European countries would benefit more, and some countries like Austria, Germany, or Italy as well, while countries like Spain, Portugal, and Greece would be losers. He described enlargement as an exogenous shock with asymmetric distributional effects on the EU. And this brings me to a point which was clearly a weak spot in the assessment of enlargement: the reallocation of investment from Southwest Europe to Central and Eastern Europe. This added to the pressures from globalization and reallocation of investments to Asia. A study by Dobrinsky from the Vienna Institute for International Studies describes very well how growth in the new member countries was driven to a large extent by credit, FDI, and capital inflows. Financial services and real estate received around 40% of the funds from abroad, with the exception of Slovakia, where more investment went to manufacturing. And even if credit would be as easily available as before the crisis, the sentiment towards the region has changed, and investment decisions have become more selective. In 2009, a first evaluation of the enlargement was done on behalf of the European Commission. But by then, Brussels and Frankfurt were busy with fighting the liquidity crisis and with stabilizing the financial sector. Enlargement was no longer in the focus of official policy debates. The financial sector reform became a priority before Greece triggered a second wave of crisis in the early 2010, and stability and stabilizing government debt markets became more urgent for the Eurozone. New member countries are among the most open economies, but recovered relatively quickly from the shock of 2008 and 2009. Banks in Central and Eastern Europe were supported by the Vienna initiative, which prevented further withdrawal of funding from the region. But the banks did not need the support of their national governments. And new member countries were less indebted than their Western European neighbors. And therefore, the sovereign debt crisis was less relevant. Funding from abroad has become more difficult, and regulators are more strict regarding, and we have heard it this morning, regarding loan-to-value or regarding loan-to-deposit and cross-border transfer of liquidity. The growth outlook for the region has weakened somewhat, but growth rates will remain higher The recent World Economic Outlook assumes 2 to 3%, and this is clearly above the European average. This brings me to one of the most severe consequences of the crisis, financial fragmentation. It continues to hamper growth, interest rate differentials are still there, and uncertainty remains for investment decisions. Uncertainty refers to the regulatory environment as well as some of the banks could experience recently in our neighboring country, Hungary. Would banking union be an opportunity for reintegration? Already the announcement of banking union in 2012 had a big impact. Together with the speech of Mario Draghi in summer 2012, this commitment to a common approach in the Eurozone has brought down interest rates and had a big impact together with the impact of the reforms. Establishing banking union was a big step. Sovereignty in banking supervision was given up. So would participation in banking union be beneficial to Central and Eastern European countries? We have touched upon this a bit this morning. One could say that banks do not need it in Central and Eastern Europe because the negative sovereign bank feedback loop, namely that bank problems in highly indebted countries tend to worsen the situation in the sovereign debt market and vice versa. This problem doesn't exist in Central and Eastern Europe. This is true, but a more streamlined approach to supervision, simplification of supervisory cooperation could help to create more confidence, and this confidence for investors is needed. Reintegration of the financial sector should be, therefore, a high priority in the EU. What else do we need to revive growth and employment? Everything starts with innovation, with research and education. And if we look at countries which are struggling with recession and with structural problems at the moment, and with their labor market situation, very often their spending on education and research is below the average in Europe. But reintegration is a much wider target. The single market is far from being complete, and Europe is defending its own hurdles between the countries. Let me give you an example. Why do we need optimization programs for the railway systems in each country separately? Also, it's a big struggle, and it would be much better if we could get to a common European system. Removing border controls is not enough. Mental, legal, and practical borders still exist. And this brings me to my last point, the interplay between the national and the EU level of decision-making. Financial crisis has strengthened intergovernmental decision-making because no stabilization tools were available at the EU level. An efficient interplay between EU and national institutions is a challenge for the years to come. Intergovernmental decision-making has the drawback of lack of EU-wide legitimacy and accountability procedures. Therefore, a debate about amendments of the treaty might start in the near future. We will have a debate about governance and whether the new fiscal framework for the Eurozone is adequate, but also about cooperation between Euro and non-Euro area countries. We should have a debate whether the structural and regional funds are used really in the interest of convergence and sustainable growth, or whether they are just allocated according to formal criteria. We should have a debate about whether enough is done in funding for research and education as a key for future innovation. When we look back to the last 10 years, enlargement was a success, but many challenges had to be met and are still there. Old member countries, new member countries, I hope in 10 years we will not distinguish anymore. We need a reflection about the future working of the Union and the cooperation and cohesion between euro area and non-euro area countries. A few days ago, I got a book with the title, "A Garden is Never Finished." And I think this should be a kind of inspiration for us. I asked the CEO of a European company recently, his company is active in 19 countries of Central and Eastern Europe. Why is the performance in Baltic country, why was it so good recently? And he told me it is very simple. We could hire excellent people. And this is what explains the success of the last 10 years. And this is what creates confidence for all of us. Thank you.